With chaos at the New York Stock Exchange.
Get back in there at once and sell!
We are looking at major records for the Dow.
Now is the time to buy.
Well, the law of gravity hit Wall Street today.
We're down by between 3 and 4.5%. The stock market is now down 21%.
Because we're now down 43%.
What in the world is happening on Wall Street?
You gonna do something or just stand there and bleed?
The whole town's going crazy.
Hello and welcome to this week's edition of the Big Money Report. I'm your host, David Booth, President and Financial Advisor at BIG Investment Services. That's BIG, Booth Investment Group. We're full-service financial advisory based out of Dover, Delaware, serving clients all across this great country. And you can read all about us at abigplan.com. That's www.abigplan.com. I like to put this show together once a week just to give you a recap of the week behind and a peek at the week and weeks to come. Trying to keep you up to speed with you and your money, and we're glad you're with us today. It is Friday, September 13th, 2024. A little shout out to Karen. Good seeing you this week, and Drew. Appreciate everyone that tunes in and listens from week to week. It just means a lot to us that you're using the tool and getting something out of it, so thank you so much. Let's jump into the numbers. It was a really solid week across the board, a volatile week. I mean, it was all over the place, down, up, but it finished up pretty significantly. Dow Jones up 2.5% this week. S&P 500 up 4% this week. But keep in mind, it's still negative on the month. All the indices are still negative on the month. So it's a big move up, but it's also some really low levels. NASDAQ up 5.9% this week, and the Russell Small Cap Index up 4.35%. Looking at the volatility index, as you might expect, it was down quite a bit this week, down 26%. We're sitting at a 16.5 on the VIX. That's the volatility index. And long-term bonds this week, a little bit of move to the upside, not too much, up 0.8% for the week. When you take a look at the sectors, it was really the growth-oriented stuff that really came on strong this week. We saw semiconductors up 10.1%, retail sales up 4.1%. Technology as a whole up 8.1% on the week. Communication services up 3.7%. Real estate 3.6%. Materials 3.1%. Industrials 3.7%. Healthcare was a little bit more conservative, only up 1.4%. Consumer staples more conservative, only up 1.1%. And utilities, even though they tend to be more defensive and more conservative, they still had a solid week too, up 3% for the week on utilities. So what moved the markets this week? Oh, before I get there, how about gold and silver? Gosh, they're going to get upset. We can't leave them out. Gold was up 3.49% this week, and silver, high-ho silver, up 9.9% on the week. So it had a pretty good move there. So what moved the markets? Well, mainly it's this economic data is creating a bit of a debate on whether the Fed is going to cut 0.25% next week or 0.5% next week. So we got some inflation numbers earlier this week. Got the CPI number. The month over month was a little bit hotter than expected. The market did not like it. And I tell you what, we have some wild volatility this week. It was a Tuesday, Wednesday. Market was down 1.5%, but then it turned around and finished up on the day. I mean, just been some really crazy trading this week in the markets. But anyway, the CPI number kind of caused this knee-jerk reaction for everything to sell off and go down a lot. Things did work their way back up again. Then we had the producer price index the next day, the wholesale numbers, and they were pretty much in line and down into the twos for year over year. It was good to see that. But again, these numbers that were a little bit hotter on the CPI caused the market to think that maybe the Fed is definitely not going to cut 0.5% this week, that our best chance would be 0.25%. But then towards the end of the week, there were a couple of financial reports that came out that were saying that the Fed hasn't closed the door on the idea of a 0.5% cut. We had a former Fed board member come out saying that there's a really strong case to be made. It was Dudley, I believe, for a 0.5% cut. So normally, sometimes what the Fed tries to do, they will try to leak little tidbits here and there to prep the market for what might be to come. And I have to tell you, I think the Fed should have cut in July. We had talked about that. I think they should have cut in July 1/4 point. They didn't. But now here we are. We're seeing softening. We're seeing cracks in the economy. A lot of folks are looking for 0.5%. But at the same time, doing 0.5% could cause a little bit of a panic. And it's like, how's it going to play out? Sometimes the Fed will kind of leak this stuff into different channels, back channels, try to get some of these things floated out there for the market to digest beforehand. So I find all this very interesting, and we won't know until it happens. Look, my best bet is that they only cut 1/4 point. But if they're seeing some of these weakening areas of the market and this unemployment going higher and all these different types of things, they might step up and do the 0.5%. We'll just have to see what happens and see how the markets react to it. But it was a big rally off the lows this week. The market's been really getting hammered here for a couple weeks. We had a really major turnaround this week. So we're kind of right back pretty close to all-time highs on the S&P 500. And I think that this will probably be short-lived. Okay, I'm not trying to be negative Nelly, but when you look at the intermediate term indicators right now, the technical indicators on the intermediate term, they really still look rather weak. And I think that this rally that we saw this week could definitely fade into next. And we had a couple of things that pushed the market higher this week. There was a conference, investment conference, and some of the tech companies like NVIDIA were talking about chip demand and stuff like that and caused them to really get pushed higher. So there's a couple of other ancillary things that kind of lifted the markets this week. Will that hold? Will that carry forward much further? I don't know. I think it could be a little bit wishful thinking. Again, seasonality is pretty weak this time of year, especially in presidential election years, and the indicators don't look so hot on the intermediate term. So we will see how things play out. But look, I like where we sit. We've got a little cash on hand, not too much, just a little. We got some money and bonds, which are kicking off some nice dividends and interest, 5 to 8% we're getting on some of those. And I love everything we've got in the models right now as far as stocks are concerned. I cut one loose last week, Snowflake. Actually, you know what? I'll take that back. I cut that loose on Monday of this week. I sold that one. It's a data management company. It just hasn't been executing the way I'd like, so I sold that one. So we got a little cash. I like everything we've got right now. There's nothing I want to sell. I like it all. And I like where we sit. Market wants to go higher. We'll make money. If the market takes a hit or dips back down again, we've got some protections. And hey, that's where we want to be sitting at the moment. And if the market gives us opportunities, we'll jump on them. Otherwise, we'll stand pat for now. Okay. So I'm going to wrap up. That's what I've got for you this week. But look, between now and next we meet, as you're thinking about your future, your long-term goals, all the things you want to do with you and your money. Maybe it is buy that second house, pay for that big wedding. Got a lot of weddings going on this year. A lot of clients with kids getting married. Some of these folks that I met when those kids were just babies, just newborns. That's pretty cool to be doing this for so long that you see newborns who get married and go off to college and all that kind of stuff. People retire that were just daydreaming about it when we met. So that's why I love doing what we do. This is a great business to be in. It's very fulfilling, helping folks get to where they want to be. And I thank you for trusting us to do that. So between now and next we meet, just don't think about your dreams and your future. Think big, think big. And I will talk to you next week.
Thank you for listening to this week's edition of the Big Money Report with your host, David Booth, President and Financial Advisor at BIG Investment Services. For more information on BIG and how you can access their planning and investment management services, visit them at abigplan.com. That's abigplan.com. Or call them toll-free at 866-946-PLAN. That's 866-946-7526. The foregoing content reflects the opinions of David Booth and Booth Investment Group Incorporated and is subject to change at any time without notice. There's no guarantee that the statements, opinions, or forecasts provided herein will prove to be correct. Content provided herein is for informational purposes only and should not be used or construed as investment advice or a recommendation regarding the purchase or sale of any security. All investing involves risk, including the potential for loss of principal. There is no guarantee that any investment plan or strategy will be successful. Please consult a professional before investing.